Ladies and gentlemen, good day and welcome to the Q4 FY22 earnings conference call of Gujarat State Fertilizers and Chemicals Limited, hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harmish Desai from Batlivala and Karani Securities India Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon and welcome to the fourth quarter and full year earnings call of Gujarat State Fertilizers and Chemicals Limited, hosted by Batlivala and Karani Securities. From the management, we have Mr. V.D. Nanavati, Executive Director, Finance and CFO, Mr. S.P. Yadav, Executive Director, Mr. Vishwesh Vacharajani, Deputy General Manager. I would like to thank the management for giving us the opportunity to host this call. We will begin the call with opening remarks from the management, post which we will have a Q&A session. Thank you, and over to you, sir.
Yeah, good afternoon. Welcome all the participants of this post-result conference call of GSFC. I would summarize the performance of the company. Mainly, I will highlight the full year performance. So, I'm glad to announce that this was the record year for GSFC in terms of highest sales in revenue terms and highest PBT and PAT in the history of the company. So, we thank all the investors for supporting GSFC in this time. The sales for the year grew by 20% on overall basis. However, industrial product sales grew by 65% on a very beyond chemical market. Caprolactam benzene spread also improved to almost $1050 from almost $700 last year. So there was a good growth there. Melamine 3 plant so stabilized during the year, and we had the highest melamine sales during the year coupled with good price realization. The production and sales data are hosted on our website, so you all can access the same to see the volume numbers there. As you know, since last year, company's financial performance has improved and working capital position is very comfortable. In fact, we had a deposits of rupees 1500 crores as on March 22. That brought down the interest cost substantially, and in fact, we had a good interest income reflected in other income line item in the profit and loss account. Production at Sikka unit, where it is a coastal DAP plant, it was affected because of the vagaries of input prices. So, phosphoric acid and ammonia prices rose substantially, and coupled with reasonable MRP to be maintained, which remains affordable to farmers, and subsidy level not every time matching with the input cost, that kept the economics at Sikka unit making it non-viable many times, so their production and sales was affected. However, due to lower volume, our marketing cost went down substantially, so that was some positive. Subsidy release, as government has been very regular in releasing the subsidy. So far, urea subsidy up to April 22 has been paid, and for phosphatic and potassic fertilizer up to March 22, all the subsidies have been paid. From quarter 4 onwards, there is some softening of some major industrial product prices, particularly capro and melamine. So they have come down from the peak level observed during the earlier 9 months period. However, the spread and the, of course, margin remains good. With prices prevailing at such a high level, and government has also increased the subsidy level for various fertilizers. So we see good growth in terms of revenue numbers for the current financial year also. Maybe some 25% growth is expected. We had spent around 400 crores on capex. We want to spend around 400 crores on capex during FY23, and of course our long-term growth based on new projects and new plants continues. So we'll be investing in new sulfuric acid plant, ammonium sulfate plant, HX crystal, then chrome, gypsum granulation, phosphoric acid, sulfuric acid as Sika unit. And we also want to take the lead in green ammonia and green hydrogen production, of course on a small scale to start with. And management is also considering setting up additional melamine 4 plant of 40,000 metric ton capacity, and urea revamping to meet the energy norms prescribed by Government of India is also planned. So we have a pipeline of good projects on hand, and later on we will be developing more projects at Dahej land, where thrust will be on setting up more chemical plants to reduce dependence on the fertilizer segment. So this was the short summary of performance and the current year outlook. Now we can move to the question answer session, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Hello. Yeah. Thank you for taking my question, sir. Just wanted to know, as you have announced that a lot of projects are in the pipeline. So just wanted if it at all possible to give the breakup of all these projects and their cost, and ultimately the total cost which would be involved in this, total capex, and when we are expecting these projects to be commissioned.
Yeah, so projects which are under commissioning are sulfuric acid, that is will be a 5th plant at Baroda unit. So that will be 600 metric tons per day, and capex will be around 250 crores. This will be for supporting our sulfuric acid requirement at Baroda unit, and maybe it will be done in 2024 commissioned. Similarly, we have ammonium sulfate, that will be the 4th plant, that is 400 metric ton capacity at a capex of 110 crore. So that will bring in the revenue of around 480 crores per year, and by next year end we plan to commission this plant. Then we have a small HX crystal plant that substitute the imports from China for pharma industry. So it's a 20 metric ton per day plant with a 125 crore capex, and that will bring turnover of around 100 crores from it will be commissioned by the end of next year. Then in line with the Government of India directive or policy to encourage organic fertilizer, we are going to produce chrome fertilizer, which is based on rock phosphate, and it contains phosphorus. So that will be 400 metric ton per day plant with a small capex of 20 crores. It will be set up at our polymer unit, which is lying idle after our polymer unit was shut down in 2020. Then on a larger side, the projects which are under consideration or technology tie-up are phosphoric acid and sulfuric acid plant at Sikka, that is 600 metric ton per day phosphoric acid. That capex is around 1,500 crores. So that will support our phosphatic production at Sikka unit. So technology tie-up is going on for this plant. Similarly, we are talking to OPAL for MMA project at Dahej. So that will be around 2,000 crores. So that talks about the input supply and pricing is going on with OPAL. Similarly, melamine new plant will be around 1,300 crores. So for that also technology tie-up is going on, and it will take 3 years after zero date. Urea revamp is around 400 crores. So that is a mandate from Government of India to match the new energy norms, reduce energy norms. Otherwise, they deduct the subsidy or they provide subsidy at the lower norms, even if we don't achieve. So these are all some details about the project. We are also doing some solar 15 megawatt project for reducing our power cost. So that will be commissioning this by December 22, and it will reduce our power cost to some extent. And as I said, for a longer term horizon, new projects at the Dahej will be set up, but it will take around 5 years to come up. So right now, we are just touching upon the longer horizon.
Okay, sir. So I think big round of capex for next, I think 3-4 years. So basically, from current level, just wanted to understand what sort of revenue estimate we should see for at least next 2 years. What kind of additional revenue addition we will be seeing for FY23, 24, maybe if you can just add upon.
Yeah, so 23, as I said, will be crossing 11,000 crores from 9,000 crores at present. And when these plants really come up by, say, December 23 or early 24, there will be some further addition to the revenue from HX crystal, ammonium sulfate, 4 plant, and this could be to the tune of 500 to 600 crores minimum.
Okay.
Additional. So price inflation and all this will be further adapting, but minimum this will be 500 to 600 crores will be additional from these particular 2 projects.
Okay, good. And in sir, I'm not talking about the fertilizer side, but just on the chemical side, how much confident we are in terms of maintaining the margin or maybe scaling the margin profile with all these backward integration things coming into play in next maybe 2 years?
Yeah, so no, we are the very large buyers of the various raw materials in this chemical space like benzene or sulfur or MEK, oxime. So we get a very good competitive price for whatever procurement that we make or tie-up that we make. So then we are able to maintain broadly the normal margin seen in chemical sector. So say caprobenzene spread of around $1,000 is maintainable. Similarly, melamine also gives a very good return. So these new plants are quite efficient plant in terms of reducing variable cost. So that helps in maintaining the margin.
Okay. Okay. And one last question, sir, on this Dahej project. I think that would be the biggest project going forward for us. So any guess we can get on this? What kind of chemical we will be adding there?
So broadly, we will be confining ourselves to our niche areas or core strength, and we don't want to venture into unknown areas. So those projects will be upstream or downstream of ammonia and the sulfuric acid chain and melamine chain or capro chain. So those things we will be concentrating. So it will not be something very adventurous. And now with expanding market, there is a good scope of all these derivatives instead of selling a commodity kind of a thing. With the derivatives made for specific application, like say for melamine, it is used for making fire retardant, say switchboard or MCB. So there we get more value add than selling just melamine for the commodity. So similarly, HX crystal is specialized for API in pharma industry, which right now is 100% imported. So with our entry, domestic availability will be there. So pharma, those who are buying these things, they will have alternate source of India-based supplied line. So all these things helps in to the customer and also to us in selling the products on international pricing basis, IPP. So these are all very remunerative things.
Okay. Okay. And funding would be from mix of debt and equity, or it could be from internal program?
So if required, we'll tap some long-term finance. Otherwise, at least we make some 500 crores cash profit every year. So by the time all this project comes, we will have internal generation sufficient to meet most of the requirements.
Okay. Okay. That's it. Thank you for taking my question. That's it from my side. I'll come back in queue. Thank you.
Thank you. The next question is from the line of Rahul Sanwal from Edelweiss. Please go ahead.
Happy evening.
Yes.
Congratulations to the management for giving stellar performance, best ever sales and profit. My question is, sir, in the last quarter, we had chemical sales of around 687 crores, industrial product, and we had a product profit of 166 crores. That was around 25% margin. But in the current quarter, our sale was 782 crore and profit was 68 crore, around 9%. Why there is such a drastic fall in the margin of industrial product?
As I said, the very high prices that went up to say 9 months of last, 21-22, those prices started to cool down, particularly for capro and melamine from January, February 22 onwards. So those very high margins went down in this quarter 4. So otherwise there is no abnormality. So we are generally earning between say 12 to 15% margin on the industrial products. So that will be maintain overall basis.
So in future, we will be able to maintain this kind of margin around 15%, 12 to 15%.
Yes.
Thank you, sir. That's all from my side. Thank you very much.
Thank you. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Namaskar, sir, and thank you for the opportunity. Sir, firstly, just in continuation to the earlier participant, we also found that for this quarter, even the fertilizer sales were lower, but the profitability was significantly higher on a Q-on-Q basis. So if you could explain to us, sir, what was the key reasons that attributed and what are the consistent margins we can expect?
No, so government raised the subsidy per ton from October 21, and so subsidy is paid on the post-sale basis. So when actually farmer buys the fertilizer, we are entitled to raise the claim. So those differential claims were accounted in Q4 in fertilizer segment. So the profitability went up substantially high, but that is not a sustainable or thing. It's a one-time thing. So generally we make a margin of between 5 to 10% in fertilizer. That is sustainable. And chemical product, as I said, between 10 to 15% is the normal margin.
So, sir, as you mentioned that we are looking for our sales to go up from 9,000 crore to 11,000 crore for this year. So you are factoring in this increase, especially from the fertilizer segment, the improved turnover?
Yes. Because government last time government increased the subsidy, but it was confined to only mainly DAP or the phosphatic part, because DAP is the widely consumed fertilizer, and government wanted to see that farmers don't suffer because of high MRP. So instead of allowing companies to increase MRP, they compensated by increasing the subsidy. But this time they rationalized the subsidy across all the nutrients. So subsidy in nitrogen, phosphorus, sulfur, potash, all the nutrients have been raised, for which now our different products will get benefit because of this. So and of course some MRP increase has also been allowed in all the phosphatic fertilizers. So this will increase our fertilizer revenue substantially in the current financial year.
And the margins will be in the vicinity of 5% would be the margins we should work with?
5 to 10%.
Depending upon the different grades.
We are being very efficiently managing. As I said, we buy inputs at a very competitive price, whether it is a sulfur or natural gas or ammonia. So that helps in a volatile market.
Correct. And sir, there is also an increase in inventory, change in inventory when you see 319 crores. So which segment does it attribute to, sir?
Inventory as volume term has not really increased. It is just valuation has gone up. So it is showing more number. Otherwise, volume is not there. I mean, it is not really increased physically.
Okay. And that is also, sir, pertaining to both the industrial chemical, because industrial chemical you say the prices have cooled off. So that is pertaining only to the fertilizer segment.
Mainly fertilizer, because we brought phosphoric acid and ammonia in the Q4, which was at the peak of the price during whole of 21-22. Phosphoric acid and ammonia prices were at peak in Q4. So whatever we bought, it increased the inventory value substantially.
Sir, when we look at the volume data, sir, for Q4 and also for Q3, so we have found that in caprolactam there is an increase in inventory. when we look at the Q3 data, it was 19,970 metric ton production, and the sales were 12,709. And for Q4, again on the similar terms, the production was 22,795 and the sales is 15,813. So, what are the reasons for why we are maintaining inventory in caprolactam for the last 2 quarters?
No, there is nothing specific reason, but depends on the demand. So naturally, we would not like to sell off when the prices are not competitive. So not just dump whatever we have in the market. So we look to the profitability aspect also.
Correct, sir, because on a 2-quarter basis, on 2 trailing quarters basis, we are holding inventories. So if there must be something in the market because of which we are unable to liquidate it, as we are the sole player, I think, in the caprolactam.
Right. Yeah.
So if you could explain what would be the reason? Is it the lower realizations or the lesser demand from the end user industry? Or what could be the key reason?
No, major reason is that our nylon 6 production has increased. So whatever production you see, they are on the gross basis. But instead of selling caprolactam, we sell more, convert into nylon 6 and then sell more nylon 6. So that is why the sales of caprolactam seems on a lower side. But if you see the nylon 6 against production of 7,106 tons, we have sold 8,541 tons. Correct. So that is how the capro is taken further on the value chain basis. So really there is no caprolactam demand on a consistent basis, any problem.
Right. And so just sum up, sir, for the current business environment in the industrial chemical segment, post the March exit, as you have told that the realizations are trending downward, how are we today when we are 2/3 into this first quarter? Are the realizations trending lower only, or we should be more concerned about the margin profile, the delta?
Yeah, so better to look at the margin profile only as far as we maintain $1,000 spread. This is okay, and of late caprolactam prices are also rising in line with the crude and benzene price. So, but margin, as I said, on overall basis will be minimum $1,000.
The spreads are maintained.
Spread is maintained, yes.
Okay, sir. And last point is about the raw material basket, and then I have a small question about, sir, this dividend payout also, sir. Sir, I think so this year, firstly, there seems to be congratulated on a very good set of numbers, but the dividend payout has been at 11%. So the thought process of the management behind a dividend payout of 11%, if you could throw some more light onto it. And also about the raw material basket, sir. How is the raw material basket currently shaping up post the March exit? How are the price? What are the price trends in terms of the key raw materials, sir?
Right. So, as you know, GSFC is a conservative company, so we will not jump suddenly on higher dividend because of good numbers. And as any one would expect that dividend should be consistent. So paying something more suddenly and then bringing it down when it is not supported by numbers. So we don't follow that policy. So we look to the consistency kind of a thing. And plus, as I said, for new projects also some funds are kept so that we don't buy expensive term loans. So that is the thought process behind the dividend. Otherwise, raw material basket, we, as you know, with very small variety of raw materials, we produce large number of finished product. So at Baroda unit, say we use only 4 to 5 raw material, but we produce around 50-60 products. So, of course, raw material prices are rising, like crude is at 119 today, so it will affect benzene price going forward. And rock phosphate prices are also rising. So the ammonia has started coming down, and phosphate acid we expect it to be steady for April, June, in line with January, March prices. Otherwise, natural gas prices are also rising in line with, they are benchmarked with the crude. So there also some rise is seen. But as I said, we are able to maintain the normal margin with good combination of various products and competitive procurement policy.
So we can sum up that the normalization of margins in the industrial chemical would be there in the first quarter itself. The dip which we have seen, particularly for the last quarter, is this the normal, or the one which you have told 12 to 15% is the number which should work out?
That will be seen in the first quarter itself, because
15%. Yes, and the utilization levels are up to the optimum level.
Yes. So there is no question of any demand problem. Demand, because most of the things we are monopoly suppliers, so demand is always there. So that is why we are doing more projects, because we are not able to meet the domestic demand also. So demand is not a problem.
Okay. And on the employee cost front, sir, this 668 crore is the number, annual number. Should we look at this number for the next year with some increase pertaining to inflation? What should be the numbers that we can work out?
Yeah, some increase as compared to the current year overall yearly number. Some increase of inflation will be there. Otherwise, if you see, it's going down and down once wage revision is there. From that year itself, it is going down every year. So this time some inflation impact will be there in the March 23 result.
And one small point, and to conclude, and then I'll come in the queue, sir. Firstly, sir, what we investor or the investing community, and particularly myself, and I'm speaking for myself, it feels that, sir, there's a lot of lacking on the part, if I may use the word, on the management in approaching the investor in the right way, sir. We have requested for the investor presentation. We have requested for comparative volume data on a Q-on-Q basis, the cumulative numbers, sir. But somehow these messages are not being accepted from the team. So I being an investor, and would also like to understand the reasons why is that the merits are not looked into for investor presentation. And also, sir, on your point that just to conclude, sir, also on the point of dividend part, sir, whenever, sir, what my basic understanding is, when the dividend is declared, it is based on the performance, and also on the basis on a conservative basis on how the capex will happen. When the capex is going to happen 3 years down the line, and in 3 years, lot of things can change, business environment can change. So we are withholding today's earnings for the coming 3 years, where the scenario can change totally. So somehow, sir, this message is also not going good with investors, particularly with, if my understanding is there, that we should look at some stable dividend payout ratio, and 11% looks absolutely low, sir. So, sir, look into the aspects. Sir, there are reasons why our market capitalization is low, sir. So one must try to take the feedback and messages from the investing community and work out the reasons why things are not getting corrected, even after having the best of the management and reporting best of numbers. The things are in front of money. Everybody is there to see what is the how the market behaves. So there must be reasons why the market is not rewarding its investors. So please, I request the management to look into the aspects of it, deliberate on the same. That's the humble request from my side.
Kapurji, namaskar. Vasarajani here.
Yes, namaskar, Sirji. How are you, sir?
So far as your point regarding the investor presentations and getting more connected with the investors, you will appreciate last 2 years we have lost good time on the account of Corona and all. So you know, and I think many of the investing community friends know, we have been very regular in meeting the investor, at least once in a year, regularly we have been meeting for years together with and in closer meets with major investors including mutual funds, etc. That process with the Corona having gone, we are expecting that we will start that process again, and I am sure we will be able to come back with the details of the date, etc. for the things soon. 1. 2. So far as dividend is concerned, of course, since as you have touched up, I will only touch upon the subject. Mr. Nanavati can further throw a light on it. 110 to 125% is definitely an increase, and probably in a way your point has already been addressed by the management.
Right. It's up to the yes. It's up to the management to understand. Investor presentation was my point, and if it can be dwelled into in much better way, you can take the example from the other companies in the same sector, sir. What kind of deliberations are done at the investor level in terms of presentations and the volume data. It will suffice the needs of the investors. That was my only point.
Okay, thank you, Saket ji.
Thank you, sir.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investment. Please go ahead.
Yeah. I just wanted to know, as of March 2022, what is the capacity of the chemicals that we produce, like ammonium phosphate, sulfate, caprolactam, and can you give us the number in terms of capacity utilization as well, if possible?
Yeah, so we generally operate all our plants beyond 100% capacity. Sometimes it is 125% or sometimes more than that. So, because as you may be knowing, our plants are old and we have done a lot of debottlenecking over a period of time. So, compared to yearly installed capacity, really we operate on a much higher capacity. So like caprolactam operated 105%, 124% rather, and ammonium sulfate operated at 153%, and overall fertilizer Baroda unit plants were 115% of their installed capacity. Melamine, as I said, recently melamine 3 is stabilized, so it operated 104%. And nylon 6 plant operated at 116%. So most of our plants operate beyond 100%. And you will appreciate that some of the plants are 50 years old, and nowhere in the world this kind of old plants work. But in case of GSFC, they not only work smoothly, but they work beyond their capacity. So it shows the management expertise in technical area and the proactive repair maintenance that is done by the company for maintaining and consistent production.
Yes, absolutely, sir. Absolutely. It's always been operating at higher level. I've been tracking the company for so long. Coming to another part, sir, you earlier mentioned that we are expecting around 11,000 crores of sales in FY23, and after certain capex kicks in FY24, how much additional do we expect in terms of, you said 5 to 6 something, so I missed on that part.
Yeah, 500 to 600 crores.
Okay. 5 to 600. Okay, right, sir. So just one more thing. As an investor, I wanted to bring it to the management attention. So we used to earlier, like in FY18 or something, we used to in our annual report disclose all the realization part, right? For per chemical, what the realization were. I guess we have stopped it in last 2-3 years, if I'm not. Can we expect that going ahead in this financial year, we might, disclose like per chemical what the realization is? So it helps us analyze the company and understand it better.
Yeah, so with the change in accounting standard and disclosure requirements, when which is not required, we don't disclose. But as I said, we have uploaded these details on our website, where you can know with the sales figure in crores and quantity sold, you can derive easily the per ton realization. And we upload this data every quarter, so you can have whatever period comparison you want to have. You can have it on your own, along with the previous year figures, of course. So some analytical work will need to be done by you with change in accounting standard.
Yeah. Yes, sir. Surely. Thank you, sir. That's all from my side.
Thank you. The next question is from the line of Smita Mohta from Credent Info Edge. Please go ahead.
Yeah, am I audible?
Yes.
Okay. So I wanted to know, sir, that with your capex of near around 500 to 600 crore, how much would your interest cost increase?
No, as I said, we get cash surplus 500 crores every year. Most of the capex will be funded resources only.
I'm sorry to interrupt. Mr. Smita, can you please mute yourself when management is answering the question?
Okay.
Yeah, so with internal accruals of 500 crore every year and projects taking time in setting up, so most of the capex will be funded through internal sources only. Hardly we will need some term loan or kind of thing. If needed, then only we will be going for those things. Otherwise, we generally don't need any external funding for the projects. So, as you might say, in last 10 years also, hardly we have taken any projects loan. So, most of our capex has been funded in-house only.
Okay, so one more thing what I wanted to ask was, sir, that with this capex, where will your market be in the fertilizer industry?
Can you repeat the question, please?
Yeah, I wanted to ask that with this capex, where will your market share be in the fertilizer industry?
Yeah, so like as I said, one is our ammonium sulfate fourth plant we are going to set up. So there our market share is already more than 60% because we and FACT, only two companies produce ammonium sulfate in the country. So we enjoy most of the market share, and with this higher production, it will further go up from 60% that we have at present. And another thing is HX Crystal project. As I said, it is an import substitute, and there is no domestic manufacturing, so everything is imported. So maybe we will have a market share of around 20% with this new capex coming in. So we have fairly on overall basis, on all India basis, all kind of fertilizer. I think we are 8th in the country in terms of market share. And of course, in Gujarat, we enjoy more market because all the facilities are setting up in Gujarat. So In Gujarat, we have a larger share, but on all India basis, we are 8th in the volume numbers basis. Total volume sold in the country is more than 6 crore tons of various fertilizer. So there we stand on the 8th.
Okay. Another thing which I wanted to ask, sir, was that with this capex of your fertilizer, which fertilizer of yours will have margin?
These are all, as I said, ammonium sulfate, only 2 suppliers are there, so we have a good margin in this field. And in general, we generally don't talk about individual product-wise margin. So, as I said, fertilizer segment creates a margin of 5 to 10%.
Okay. So, sir, just last question. Your working capital cycle and your return ratios, can we expect any in the same?
As I said, fertilizers, being a low margin and high volume business, so those ratios or percentage don't improve much. If a volume game, so absolute numbers like you won 500 crores or you won 1,000 crores, those numbers matters more.
Okay, thank you, sir.
Thank you. Before we take the next question, reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Jaideep M. from Jalad Merchant. Please go ahead.
Sir, is there any business case for reviving the Carmelite project, sir?
Yeah, so as you know, the potash prices have substantially increased. Officially, contract price with India is $590 for 22, which was $280 for 21. And of course, world market it is much higher. So there is a business case for reviving the potash project, and the local Canadian management is undertaking some technical studies to update the capex and opex and the viability of the project, and then once those things are done, maybe say in July, some announcement about how the project will be moving, those kind of things will be announced.
In the past, you have mentioned that if price has to be consistently about $250 to have a viable project. Is that still valid, sir? That previous 2 years back, that
new capex, like steel price and everything has gone up, so the new capex could be more. So the minimum benchmark price may go up, but as I said, it is much higher in the present circumstances, and it seems it will be a viable price for say next at least 10 years or so. So hopefully let us wait till the financial model is reworked and actual numbers are out.
Thank you, sir. I don't have any more questions.
Thank you. The next question is from the line of Harmesh Desai from B&K Securities. Please go ahead.
Thank you. Sir, any update on the contracted phosphate prices for 1Q?
No, now there is some fragmentation because OCP has not declared the price, and Government of India wants that those March prices should be rolled over because subsidy has been calculated on those March prices. So those prices should remain valid at least from April to June. So there is some discussion going on the price. So, but formally there is no declaration as on today.
Okay. So, sir, according to you, the price should be below $15-30 per metric ton?
No. Minimum 15-30.
Okay. And sir, can you give an update on what is our annual phosphoric acid requirement?
So that depends on the economics of the production. So if I produce the 7 to 8 lakh tons of DAP and other NPK products, I will require some 3 to 4 lakh ton of phosphoric acid.
Okay. And sir, to what extent are we backwardly integrated in our phosphoric acid requirement percentage?
So ideally typhoid should give me 1,80,000 ton, so almost 50% of my annual requirement. But there they are not able to produce consistently. So hardly 20-30% is backward integrated.
Okay, and sir, this is for all our plants, or any one particular plant is this backward integrated?
So this is about the Sikka unit. In Baroda unit, we have grassroots plants, so we buy rock phosphate, and then we have phosphoric acid plant, sulfuric acid plant. So at Baroda unit, we are fully integrated. There is no dependence on phosphoric acid for outside. So Vadodara unit, we are able to consistently maintain production of 10 to 11 lakh metric ton.
Okay. And sir, any plans for debottlenecking?
No, urea revamp we will undertake to match the energy norms of Government of India. So that will be there. And recently we did debottlenecking in APS plant and phosphoric acid plant of Baroda. So we improved the infrastructure and the supporting things.
So how much did you spend on that particular project?
So that was around some, I think, 40-45 crores we spent in debottlenecking.
And sir, that increased the capacity by how much?
No, it is not really the increase in capacity, but old plants requires over a period of time good debottlenecking, repair, maintenance kind of a thing, so that
mostly
they continue.
Maintenance kind of.
Yeah.
Okay. Okay, sir, and any number on how much subsidy we have received till FY22 and how much is pending, if there is any?
Pending as our balance sheet shows, it is around 750 crores, which we have received, as I said, till date. And government has been very regular in releasing the subsidy. So, as I said, up to March, all the phosphatic fertilizer subsidy is received, and for urea it is received up to April. But of course, government gives subsidy only for the claim that we make through POS machine. So what we account for in the books may be ahead of time. So it may not qualify for subsidy claim lodgement with government. But whatever is lodged with the government, this is the status that up to March, April they have paid the subsidy claims.
Understood, sir. Thank you. That is all from my side. Thank you.
Thank you. The next question is from the line of Smita Mohta from Credit Info Edge. Please go ahead.
Yeah, so I wanted to ask, sir, again, that with your backward integration, how much percentage of expense can be reduced in your books, if you can give any percentage?
It is difficult to give any percentage, but as I said, at Baroda unit, we are highly integrated backward integration that helps in moving ahead and ahead in value chain. So instead of selling our product as a commodity, we are able to cater to niche markets where our margins are more. So that is the really the advantage. So we look forward to more revenue and more margin than only focusing on reduced expenses. Of course, broad basis we can say with common plants, our manpower expenses reduces substantially, and with many, say like DCS machine being common, we can do away with separate manpower, separate spares inventory. So all these things helps in reducing the expenditure.
Numbers which you have given for 2022 for your EBITDA and your profitability. So will you be able to replicate or put in a better performance for FY23? What can we understand from here?
FY22, because of the COVID effect, it was a kind of a abnormal year, abnormally good for the company. So as I said, we look forward to a normal margin between 5 to 10% in fertilizer and between 10 to 15% in chemicals. So that could be the kind of performance in current financial year.
So can you give in a figure, sir, for the revenue and the profitability? Any figure or any percentage growth?
No, it is very difficult to give, but as I said, more turnover will be coming from fertilizer because of the rationalization of subsidy and MRP. So, on top line that will be driving, so naturally bottom line will also be reflected in that way.
Okay, so that means that right now your revenue from fertilizer that we understand is near around 77%, right? And 23% is from chemical.
Correct.
So is that going to increase going ahead with this capex of yours? Some difference?
Yeah, maybe some 75-25 or maybe between 70-30. It's a range between 70-30 to 75-25 generally over a period of time. If you see, this is the way in which these two segments behave. So that will be broadly the trend.
Okay, sir. So just the final question, that from the fertilizer segment and from the chemical segment, which is that one fertilizer or one chemical which gives you a better margin compared to any other product of yours, and what are you doing to increase that so that you can have a better margin for FY23?
No, as I said, whatever projects are undertaken, they are driven by the same philosophy as you are telling. That is common sense that one should venture into those projects where margins are more. So, from whatever I said about capex, you can guess which are your better products. And in chemicals, things change on an international movement or international development basis. So, particularly the price is not in our hand. They are all IPP prices. So sometimes caprolactam becomes a champion product, and sometimes melamine becomes a star product. So it is difficult to say that permanently X product is good and nobody can take its place. It's not like that. It is cyclical, and suppose China sets up some huge capacity, so it will definitely affect the margin of all other players. So those kind of things keep on happening.
Okay, thank you, sir.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you for listening to us and with all your questions. We'll be taking it in the right spirit. And as I mentioned in all the Concall that GSFC's growth story is intact, and we are not going to sit back and relax. There will always be new plants, new projects coming, and with the existing plants and products also, GSFC is always trying to improve the margin, and with its volume, particularly in fertilizers, large volume helps in achieving the cost economies in all areas, so that we will continue to do. And of course, plant maintenance, proactive maintenance, and plant health and safety is our priority. And going forward, as when this ESG becomes more focus or it comes in the forefront, you will see much more value in GSFC compared to today, because today we are only talking of top line, bottom line. But at what cost to the society and to the human being, this growth and this sustenance is coming. So when those parameters become important, GSFC will be far ahead of other companies. Just to touch upon one or two aspects, like almost 40 to 45% of the energy that we use comes from green energy. While government is persuading large corporates to go for 5% green energy, we are already more than 40%. So this is the proactive way we work. Similarly, for carbon footprint, we have eradicated carbon footprint to the more than 75%, and with new projects and all coming, one day we will be 100% carbon neutral or carbon zero company. And mind well, this is a fertilizer and chemicals are huge energy users of the energy. So achieving such a high level of green power or carbon neutrality is a very difficult task, but GSFC has been doing as a part of its duty without any mandate from law or any investor community. So we'll keep on pursuing those important societal goals also, along with the value addition in the top line and bottom line. So thank you all. We'll again meet with even better performance after Q1 results. Thank you.
Thank you. On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.